First of all, I would like to congratulate you, my dear viewers, because you are one step closer to financial freedom. Congratulations! Welcome to my channel, and today you will learn about investing in mutual funds. Investing in mutual funds might come intimidating for some, but it does not have to be that way because I can guide you through it. Now, let's start your investing journey. Before we get to learning about mutual funds, let me introduce myself first. I am Mabel, and I am a certified investment solicitor for one of the mutual fund companies here in the Philippines. That means I am licensed by the Securities and Exchange Commission to offer mutual funds of the company I represent. Aside from my extensive experience in business and finance, I myself have been investing in mutual funds for over a decade already. Enough about me now, let's get down to business. We have different reasons for working and saving up for money. Whether it is for your daily expenses, funds you will use in case of emergencies, education of your child, for your hobbies, your retirement after X years, or if you want to put up a business someday, maybe a house, a car. The list goes on, and what do they all have in common? They are all financial goals. However, there is no one best product that would be the solution for all those financial goals. Your goals have to be carefully evaluated so we will know the best fit product for that specific goal. One way to save up for your goals is to invest in mutual funds. So what are mutual funds anyway? A mutual fund is where money from different shareholders are pooled and invested by an investment company into a diversified portfolio of securities. So where is the money invested? Mutual fund companies specify the investment objectives and philosophies that will govern the investment of funds it manages. To illustrate, us shareholders put in money in different types of mutual funds. There are many kinds of mutual funds, but to summarize them, there are aggressive, conservative, and balanced funds. Aggressive type of mutual funds are heavily invested in equity securities or the stock market, making the value of the fund very volatile, or could go up aggressively or alternatively can go down aggressively. Conservative type of mutual funds are invested more on short-term securities or fixed income securities like bonds, making them less volatile compared to those with equity exposures. There are also balanced type of mutual funds wherein the investments are mixed with aggressive and conservative positions, which is good for those who want to have possible big gains but are scared of too much volatility in their investments. How do investors choose which funds are good for their goals? It depends, so my clients and I discussed that thoroughly so I can recommend to them the right type of fund. So now, how do investors earn from mutual funds? The value of the mutual fund depends on the value of those investments that it bought. So if the investments go up, the value of the mutual fund goes up. Alternatively, if the value of those investments go down, then the value of your mutual fund goes down as well. It is basically like investing in a business. If the operations go well and you have earnings, the value goes up. The earnings or losses are computed based on the net asset value per share on the date of investment versus the net asset value per share on the current date. For example, if you bought your shares at 2 pesos per share and then 2 years after, the net asset value per share becomes 2.50 pesos. Then that means you have a gain of 50 centavos per share with a return on investment of 25%. If the net asset value per share becomes 1.8 per share, then that means you have a loss of 20 centavos per share. What are the advantages of investing in mutual funds? Here are some. Mutual funds are very affordable and you would only need a minimum of 1,000 pesos to start investing. It gives you more investing power and strength rather than just leaving your money in savings deposits where returns are measly. Investing in mutual funds gives you instant exposure to a lot of stocks and bonds rather than investing in them directly one by one. Mutual funds are easy to liquidate should there come a time where you would need to withdraw the funds. It would only take a few days to do so. Over time, mutual funds provide attractive long-term results, which is a good match for your long-term financial goals. Why stress over studying the market yourself when you can rely on professional fund managers to do it for you, done for a minimal fee? And lastly, mutual funds are legitimate kinds of investments, which is regulated by the SEC. Unfortunately, some people are easily attracted to Ponzi schemes or scams because they are drawn to the promise of fast and big returns. How can you start a mutual fund account? We can now do it online at the comforts of your home. Just slide into my DM so we can set a meeting for this. Upon approval of your mutual fund account, you can view this in the mobile app where you can also do further transactions like adding to it, switching to a different fund, and also redemption of your fund. Are you ready to take the next step to reaching your financial goals? Just slide into my DM so we can strategize this based on your objective, time frame, and risk tolerance. If you learned something from this video, I would greatly appreciate it if you would like this video. If you wish to see more personal finance content, just subscribe to my channel. Thank you very much for watching, and I am looking forward to have a consultation meeting with you soon.